Thanks for tuning in to the Art Tactic podcast. I'm your host, Adam Green. This week, we're diving back into the major May auction results and specifically looking at the sales from a data perspective. While auction coverage and recaps are informative, I believe analyzing the data provides a more comprehensive and digestible view of the sales season, especially given how many artworks are sold throughout the season across a variety of price points. Joining us this week is Petterson, the founder of ArtTactic, to help us break down the numbers and uncover the trends. And if you'd like to dig into the data even further, make sure to visit arttactic.com, where you can download and read all of our reports covering the sales, including our resale analysis report, our marquee evening sales report, and our snapshot reports. Thanks so much for downloading and listening. Anders, thanks so much for joining us.
Thanks, Adam. Thanks for having me.
Absolutely. Well, I'm excited to hear what the data reveals about this major auction season. And throughout this conversation, I'd like to share my perspective as an art advisor based on my regular conversations with clients, other collectors, galleries, and auction house specialists. To start, Anders, can you tell us what the broader macro data indicates about the overall performance of this auction season?
First of all, I think we obviously coming out of quite a challenging 2023 after the market sort of hit a post-pandemic peak in 2022. I think the market conditions are continuing to be quite challenging. I don't think there's a sort of a sense of panic in the market. I think it's just more selectiveness. I think the sentiment, which I think is clouded by obviously the kind of geopolitical situation we find ourselves in, many countries still in economic uncertainty, high interest rates, cost of living, and so forth. And I think all these things, the macroeconomic factors, is still hanging over the market. But as I said, I don't think there's a sort of a sense of panic. And actually, there are a sort of number of, I guess, stories that emerges that are beyond the optics of the market. So if we look at the overall market, in May this year compared to May last year, the overall total sales was down about 22%, 16% in terms of lots sold. If we compare that to the peak of the market in 2022, that's almost 55% down in terms of sales, and a little bit less in terms of lots, about 18%. So the market has been in a sort of gradual, I would say, slide from 2022. It started last year and continued into the sort of, at least in the first half of 2024. I think if you're starting to kind of peel a little bit away from the surface and start to look what's further down, you could start to see that a lot of the actual, as I said, the optical aspect, at sort of 22% down in total sales, is very much driven by very specific price segments. And we're talking about sort of, I would say, 2 million plus, so everything above 2 million, but particularly very sort of the trophy end of the markets, where we talk about lots above, let's say, 10 million, as we would define as trophy lots. They saw about a 27% decline in sales, down 67% from 2 years ago. And because of this part of the market accounts for, roughly 50% of the overall total, it has a sort of a significant weigh-in on the actual overall results. But there are also very few lots. So there's high value, few lots at very high value. And I think this is not so much, so the market is not so much driven by, I would say, a demand side. I think this is a supply side issue, where people who are in possession of these incredible treasures are probably looking at the situation and saying, do I really need to sell into a softer market, as you mentioned in your introduction, or should I sit down and sit and wait, 6 to 12 months and see if things improves? So it's not like it's a market that is falling across the board. Is actually, if you're looking at the below the 1 million, the market is pretty stable. It was down 3% from last year and actually up 10% from 2 years ago, looking at the evening sales. The day sales, as is just a sort of often doesn't get much coverage, but is also doing pretty well. I mean, it was down slightly from November, but more or less even with May 2023. So the market is being, I feel now, being very much driven by the very top end, which there are fewer consignments, fewer lots at the kind of the level that we have seen in the past. There's also influenced by fewer single owner collections coming to the market that we particularly saw in 21 and 22. So all these things are, hesitance on the side of the supply side rather than so much on the demand side. So that I think is kind of the macro picture. Challenging, but not really, as I said, any sense of panic, bit more, I would say, sort of sense of realism that, that it's almost like, I think the few last years we have seen the market kind of run away from maybe the kind of fundamental things that we have seen in the rest of the world with regards to economic indicators and other kind of factors such as as I mentioned, the geopolitical uncertainty that we're currently facing.
Yeah, and you began addressing the market's performance based on price points, which I think is really crucial for understanding the market's dynamics. You, of course, have the media and even market participants. They're often focusing on the high-value works. They're fun to talk about. But this segment, at the end of the day, really represents a tiny fraction of the art market. And while the number of collectors and galleries has really grown significantly over the last few years, what does that mean? Well, that means that the top end of the market, while it's influential, it really doesn't reflect the experience of most participants. Right? The majority of the market's operating and looking at and buying works that are in the 5, 6, or perhaps low 7 figures. And so they're going to be closely following those artists and how they do at auction. For example, they often may pay more attention to the day sales and the evening sales. Can you share what the data reveals about market performance differences across these various price levels?
Yeah, so I think what's interesting, I mean, there's a couple of things that we covered in the last report that we published. We always look at, in the last 3 or 4 years, we're particularly looking at gender-related things like, women artists, which, actually has done really, really well. It was slightly lower than May, but in terms of actually total, they accounted for about 17% of the evening sales value this May, up from about 13.5 last year. So, I mean, there is you obviously have record breaking auctions by Leonora Carrington. You have, the mid-career artists like Lynette Yadom Boyaki. You have also younger artists that's doing really well. And I think, as you say, I think the media obviously tends to focus on the trophy. That's where the attention gets, but often overshadows, as I said, a lot of what's happening. And I think there is, at the moment, in the lower segments, and obviously, as I said, when looking at the evening sales, which is one of the kind of particular segments that we looked at, obviously below 1 million is still not, there's still quite there could be potentially quite, we're not talking about $5,000 lots there. We're talking still potentially higher value, but there seems to be that the market is looking for value at the lower end. It feels like the kind of almost it's a saturation of, there's a certain amount how prices can go from, 2 million to 5 million. I think people are looking at value at the lower price points. And I think that sometimes this is obviously not so much coming up in the data when we look at the evening sales and day sales, but if you look at the kind of the print market, for example, has been really active. And I think there is a generation of buyers that is looking at coming into the market at more accessible price points, trying to find value. And I think, and you can see that with the rise of, as a limited editions market, etc. So we have sort of discussed this probably in the past, but I think the problem with the art market is not really growing, and it's partly because I think it's caters for that so much of the value is centered around the very top end of the market, which has a limited supply and has a limited number of a pool of buyers. And I think if you don't, widen that pool further down in the lower price segments, you're very unlikely to kind of, cultivate the next generation of people that will operate at that sort of top level. And So this is a little bit, I think it's a bit of a conundrum because, the art market likes to pride itself when, as I said, media articles will focusing on the very top end, which is, sounds great, but actually is quite off-putting for most people who think this market is completely inaccessible. but I do, as I said, I do think there are almost now it's at the point where there is so many stories emerging. I would say weekly basis, we are collectors looking at, artists that has very little presence in the sort of kind of, in terms of the data featuring among the top artists, but are looking for artists where there is potential, there is, strong institutional support and cultural value, but hasn't really sort of been looked at necessarily from the market point of view. And I wonder if collectors are moving a little bit away, or maybe for reasons of cost and inaccessibility, is looking for opportunities otherwise. And I think there is almost an endless amount of sub-markets in this thing emerging, which I mentioned women artists, I mentioned, surrealist women artists. There is artists from, different continents that are being, the spotlights been turned on. So interesting, I think, from our point of view, from a research point of view, is that the request is now much more about discovery and curiousness about what are the stories that haven't really emerged yet, versus the kind of the traditional names that we all know, which seems to be dominating the market for the last 2 decades. And so I and that's where I feel kind of on one way kind of optimistic that the market is not, as I mentioned earlier, no sense of panic, or there is actually a curiosity. But I think the art market is also, and hopefully this is the way we try to use data in general, is to sort of shed spotlights on different segments in the market, whether it's, as I said, by medium, or it's by gender, or it's by generation, or by continent, or geographical. And as I said, we do see more interest in that discovery, rather than just kind of reaffirming the value of something that has been there for decades. So I say, so that is, I think it's something that we really seen. I mean, on the young artist side, which I know we discussed, we discussed in the past. I think that, and it would be interesting to hear your opinion. But obviously, from a sales point of view, we have seen. So just for the audience, in terms of how we define young, it's we use the definition under 45 years old, which people might say is young or not so young, but that's the definition we use for data purposes. And the sales has been declining since 2022, 2023. We're already starting to see sales coming down for this generation. And I think it's also a symptom of, obviously, prices rising very fast. Maybe with the sort of anticipation that, every young artist is going to go up in value. And I think there was a sort of time, particularly 2022, where that was the case. And I think that feels like a little bit more realism in this market at the moment. There is more, I would say, maybe there are fewer names. There's still a lot of artists that is actually still selling. There was about 156 lots by young artists in this May sales. But sales was down about 30% from last May. So there's still artists coming to the thing, but there's probably a little bit more selectiveness and probably a bit more price sensitivity. But I would be interested to hear what you think, what you see in terms of, how your clients work and what they're interested in or afraid of.
Yeah, I mean, I think the best way to explain the current state of the art market is really to look at how we got here. And that story begins shortly after the pandemic, when the Federal Reserve and other central banks injected significant liquidity into the economies. Everyone stuck at home, not spending on travel. We saw the wealthy experience a surge in wealth and liquidity, and this led to a significant increase in art purchases over the next few years. And this was across young artists, mid-career, and established artists. Got to a point where it almost became expected for gallery shows to sell out or come very close to selling out. This phenomenon of FOMO, it dominated the art market. Prices rose both on the primary market and the secondary market. And although this raised some concerns, there was a prevailing belief that prices just would continue to climb. Recently, though, we've seen a shift in sentiment. That pervasive FOMO feeling that I talked about, that's largely disappeared for most artists, not all of them, but most. And I think buyers are now more scrutinizing, questioning whether higher prices are justified based on a variety of factors, such as who's buying the work, is the artist's work improving or at least consistent in terms of quality, how do museum curators feel about the work, and a variety of other variables. And so I think as people see this, they're starting to ask, why is this happening? I think it's due to not necessarily one thing, but a combination of factors. We are, of course, now in a high interest rate climate where keeping your money in the bank can earn you 5%. We've seen gallery prices continue to rise, as I mentioned. Collectors have bought a lot of work over the last few years, so many of them are slowing down. And we've also seen this lingering and overdue recession that everyone talked about that was supposed to happen, that never happened. I think that's impacted economic confidence. And then also the Chinese economy has slowed. And from conversations with galleries, apparently a lot of Chinese collectors are being pressured and simply can't get their money out of mainland China into the West to actually make purchases. So that's dampened demand on the primary market as well as at auction. So as a result of all these things, we see collectors are being more selective. Some are taking breaks. Others are focusing, I think a lot are focusing on the few artists and gallery programs they believe to be investment quality. These are artists whose market prices still significantly exceed gallery prices and who have a lot of career momentum. So I think we'll just have to see how all this plays out, looking at the next few big art market events closely. The next, of course, is Art Basel in Switzerland, just around the corner. But turning back to the data you gathered at ArtTactic, in addition to the overall market, you also collect artist-specific data. At this micro level, who would you classify as some of the big winners of this auction season?
Well, I think, as I mentioned earlier, I think I would guess the more sort of, well, the older generation, Leonora Carrington, I think her sale of, record sale of 26.5 million hammer price was, I guess it sort of sets a whole new a new ceiling or a new floor in our market when it comes to pricing. I mean, his previous record was about 3.3 million, I think, at Sotheby's in 2022. I think, again, this kind of comes on the back, obviously, increasing focus on gender and women artists in general, but also surrealists and surrealism as a movement, which has also done really well in the market terms. And I think if you combine both as, surrealist women artists, then I think this is a sign I would say probably that will set a precedent for, future sales of her work. And she's now sort of become the top 5 most valuable woman artists. So I think that's from the older generation. Obviously, Basquiat did there was quite a lot of works coming to auction. It was about 7 lots, about just under 95 million, I think 93.4 million. Again, hammer price that was turned over last week. I think from the kind of mid-career side, and there's been a number of artists. I mean, Lynette, as I also mentioned, Lynette Yedom Boyaki, who had basically a really, really strong 2023. That was her sort of record year in terms of auctions, and that seems to be that some of her works has come to market last week was also performing really strong. It was a 2018 painting that sold for, I think, with 2.4 million, which was almost twice the high estimate. And then when we're going into kind of more the younger side, it's a little bit more fragmented. I think one artist that we sort of covered and looked at is Luis Fratino. Also had a really quite strong 2023. And I think, when I say 2023 strong year, it was actually quite a weak year for most next-gen artists. So here are some artists that sort of kind of goes a little bit against the grain. Also sold I think it was a 2022 painting for about $400,000, which was also twice the high estimate. So it's hard to sort of based on one auction to say, here are the winners, here are the losers. And I think it's what is good to see is, I guess we're trying to compare it with last year to see whether this is a sort of a momentum that is building up, and momentum with maybe less speculation or less sort of sense of flipping. Obviously, if you putting a 2022 work back to auction, some people will characterize that as flipping, but I think it feels like, from a kind of more speculative point of view, it feels like that that sort of element of buying primary and then flipping it back to auction is coming down. It's not completely absent. It's still there, but it's definitely, the opportunities seems to be less at the moment, which maybe comes back to what we start to sort of say, that there is an adjustment, as you mentioned, between both the primary and the secondary market, and it's definitely more selective. I mean, we saw, I think in terms of the evening sales, we saw only 4 artists this year of that sort of young generation that was repeated from May 2023. So there is also there are fewer names that now seem to kind of be coming back to auction multiple times. And I guess this is a little bit like you mentioned, that the collectors and the buyers are now focusing around those names that are not simply high in terms of economic value, but it's supported also by strong gallery representation, strong institutional support, museum exhibitions, collector base, and so forth. So I guess the challenging aspects of the market now, I guess it just makes collectors and all the industry itself, or the market itself, a bit more discerning about what they sell and how they sell. So those are the kind of, what I would say, kind of 3, but there are multiple stories again. And for those of you who are interested in, we publish it on the Next Generation Monitor, which is looking at artists of, again, the younger generation, and trying to look at data both from the financial side and try to see whether that somehow the auction value matches up with the standing of the artist. And when I say standing of the artist, is where the artist sits within the ecosystem, how much support is there from the kind of non-economic aspect of things. So I think it sort of resonates a little bit with what you say. I think the market is just now sort of it's contracting, and maybe weeding out some of the aspects of the market which seems to be a little bit more where there's less fundamentals, where there's probably a bit more speculative than that's been in the past.
I completely agree. Interestingly, I've had many conversations lately where collectors ask my opinion about particular artists, and while I might appreciate an artist, my recommendation depends not only on the quality of the work they're considering, but more importantly on the price. I mean, are we talking about the primary market or the secondary market? That's what I often ask. Because there are artists I truly believe in, some even experiencing significant institutional success, but we've seen certain markets, especially for some of the younger ones, rise to such astronomical levels on the secondary market that it feels not only unsustainable, but borderline financially irresponsible to acquire their work at those prices. And there are no guarantees in the art world. It's incredibly challenging to be an artist and achieve initial success, and even harder to sustain a long-term successful career. And I think sometimes we trick ourselves into believing that some of these mid-career, very established artists that now are considered important always had this clear path to success. But that wasn't the case. Even successful artists face many ups and downs in their career trajectories. So I guess I say all that to say just that even if an artist is performing well at auction, it's not necessarily a given that they'll be considered important, or at the very least maintain that price point in the medium to long term. And speaking of speculation, many of the auction house specialists had mentioned to me really for the last few years that Chinese collectors were largely responsible for a lot of the speculative bidding at auction. Not all of it, but a lot of it. However, there's now this significant political pressure, which I touched on earlier, from the Chinese government on wealthy individuals there, in large part due to the softening economy. They want them to keep their money within the country. This is what a lot of galleries have told me lately, that it's becoming increasingly difficult for Chinese collectors to move funds out of China to pay for things like art. And so this is, just another factor beyond the economic conditions and all the other things we've been discussing that's impacting the market, in particular for these next-gen younger artists. And so something else I wanted to touch on with you is the fact that ArtTactic has a report called the Resale Analysis Report. It'd be great if you could tell us why you think this type of data is so valuable in your mind. And what did this auction season reveal from that data about the results, and also how long art collectors are holding on to artworks before reselling them?
Yeah, no, I think so. We started the resale reports about 2 years ago now, and it was a little bit of a response to, I guess, partly this financialization of art as an asset class, art as an investment, where the focus was very much about how how art can be a great investment and here are the returns, etc. So we decided actually, one thing is kind of reporting on the actual sales, but what is quite interesting is to look at, obviously this is when we talk about resale, this is resale within auction, so it doesn't mean from gallery because those prices we wouldn't have available, but it's looking at least a lot that has been, or an artwork that's been sold twice at auction. And I think it gives a sort of interesting picture of well, many things. One, first of all, to what extent is art a good investment? What does the data tell us? And is it as good as many people want us to believe? How hard is it to consistently, in a sense, make money out of art? And what does it sort of look like when you do this across many lots that features at auction? So when we looked at the marquee sales, so we do this sort of predominantly at the moment, focusing on the evening sales, but do this for New York, London, Hong Kong. And in this last sale in May, we had about 84 lots that came up for auction, at least for the second time. Sometimes there's been several times more. And I guess what's interesting in sort of the picture that emerges is that there is a kind of an interesting relationship between holding periods in particular and performance. And I think the picture is very much the longer you hold art, the more likely it is that artwork will have a higher value than you bought it for. Now, obviously, we have to be a bit careful here because we often work with nominal terms. So obviously, if you have inflation and you bought it 30 years ago, you have to take into account that. So these are not inflation adjusted. But what is interesting, as I said, just looking at how the market is, if you hold art for longer, there is a much larger opportunity or a larger chance that the market, the artwork will have a higher value. And I think what that sort of feeds a little bit into is this, the investment, art as an investment, and maybe kind of counterintuitive to kind of the more speculative that, things that we have seen in the auctions over the last 2-3 years, where younger artists was bought in the primary market for relatively low prices and then resold at auction for, multiples that probably we talk about thousands of percentages. Now, as that has calmed down, and I think looking back onto the market, obviously what tends to come back to the market is also there's probably an implicit sort of kind of survivorship bias issue here, that obviously what data that we see are probably the stronger works. There's also lots of, I guess the biggest risk for an investor is not so much whether the artwork might sell for lower value, but whether the artwork will sell at all, whether there's actually a market for it. So that the resale analysis doesn't capture that aspect, but it captures at least for those artworks which are of a certain quality and of a certain status that they do appear multiple times. And if you look at sort of the average holding periods, over these lots, there was about just over 26 years. The average return over all these 84 lots was about 4.5% per annum. Now, 4.5% per annum, I guess, maybe when we were at zero interest rate kind of environment, that looked still quite attractive. I think in today's environment, when we're looking at interest rates, so you can probably get 5% now and on your savings account. It doesn't look from a kind of risk return perspective maybe as attractive as it's done in the past. That is not to say that there will always be lots that is doing phenomenally well. But what we saw, particularly as I said, coming back to the holding periods, is that if you hold things for lower periods than or for shorter periods than 10 years, suddenly the probability of making a return, basically what we saw was that basically 42% of lots sold before a 10-year period was sold at a loss. Now that significantly reduces as you then increase 10 years and beyond. So I think it tells us a little bit something about art as the characteristic of art as an investment, particularly when we're looking at more I guess this is a more the blue chip end of the market, is that holding periods matters, and that art should be seen as a long-term investment. And so there seems to be a correlation, as I said, between the ability, obviously, to hold art for a long period of time, and this sort of kind of more speculative flipping side is a phenomenon which doesn't look like it's sort of kind of sustainable as a long-term strategy. That is not to say that it's been profitable for many, because it has, but I think as a sort of a long-term investment is clearly that we need to kind of look at art and, as a long-term investment. The longer you can hold it, the higher probability that there will be a return on that investment. Obviously, providing the kind of the criteria we just talked about, that the quality of the art and the durability and the sustainability of the artist's career. And in that comes obviously what we talked about earlier on, the nature of the representation in terms of who the galleries are and how institutionally supported the artist is, and so forth. But it gives us, as I said, just a slightly different perspective, rather than just looking at the market from a sort of volume average price point of view. It gives us an opportunity to sort of go back into the market and look at specific sort of, a lot that maybe sold 20 years ago, what did it sell today? And then being able to sort of see what appreciation it has been in value or not.
There's a level of uncertainty in the art market right now regarding what the future may hold. You've been covering the art market from a data perspective for several years. What are a few specific data points you've recently been focused on and will continue to monitor that may give hints as to where the market stands and where it may be headed?
I mean, I guess probably more interesting picture emerging is now not so much, as we say, in the sort of the trophy end of the market, but it's looking at lower price segments. We are, I mean, I would say, particularly at the moment, and maybe this is just us, because we're starting just to see more demand, is from more accessible mediums. And I think that's coming back again to the print market. I think it's a market that has been sort of, seen as a relatively minor part. Obviously, still in terms of value, it doesn't count for much in terms of total auction sales. But from an audience point of view, I guess for us is to see how our research can matter for more people. And obviously, if we're dealing with the original market, there's a set pool of buyers that might be interested in what we're doing. And I think for the print market is where we can disseminate similar types of information, but to a much larger audience that can participate in that market. So we're looking at, I would say, geographies that might not have had. I mean, we've been looking at, for example, at the South Asian market, particularly India, we started in 2006. It's been a market that, had a huge boom up until about 2008, 2009, and then subsequent for almost a decade didn't really do much, and has come up recently. So we're also following, I would say, economic indicators to start to see where wealth is being generated, looking at demographics, trying to look different data points, and obviously then maybe shedding spotlight on maybe markets that in the past hasn't really featured much in the sort of kind of in I would say in this kind of the global domain. So at the moment, as I mentioned earlier in the podcast, we're having more requests. Not that I know the answers, but we have more requests from people curious about what else is there. And I think this is the opportunity of using, obviously data can both be auction data, but can be other things. Also looking at institutional data. We published a museum acquisition report last year, looking at two museum institutions, in this case, Tate Modern and MoMA, to look at also what they are collecting and how they are changing their collecting strategy. So all these things are kind of data points that we're looking at. What is not only what's happening in the commercial sort of secondary market, which tends to be a kind of reaction to what's happening other places, but trying to pick up, pieces of information from our network regarding, okay, where is the market likely to go? So it's hard to sort of kind of give you sort of saying this is exactly where the action is happening. It seems to be much more fragmented in terms of where people are looking at it, and particularly probably driven by, their geographic, where they're based and what they're looking at. So I just feel that the market maybe has an opportunity at the moment to to expand its user base or client base by not being so focused about, what's happening at the very. I know that's, obviously a great revenue driver for the auction, particularly the top three auction houses, but I think it's slightly off-putting for many people. And I think that what's interesting to see is that people are just more looking for access points. I mean, we have discussed things like fractional ownership in the past, which is obviously a very different proposition, but this whole thing about democratization of access to the market, in this case, obviously a very financially based access to the art market, I think it's a symptom of, a generation that is looking to get in, but doesn't really have the right, or haven't had, at least in the past, the sort of gateway, or easily to find a gateway into the market. And I think that is, there seems to be more and more initiatives and companies and platforms that are focusing on this kind of more accessible levels of the market, still maybe with blue chip names, but maybe operating or selling mediums that are more affordable. So I think for me, this is almost like a kind of, as some of the froth of the market has kind of come off, it just feels like the market is a bit more curious, a bit more, what's next kind of thing. Maybe looking at a little bit more outside the sort of traditional canon of artists that we have seen, particularly in the last 3-4 years. And I think that's hopefully an opportunity to kind of grow this market further. And I think that's the only thing we can do. I mean, we are in the middle of a generational shift between the baby boomer and the younger generations. And I think it's about the art market trying to engage as much as possible that young generation that can then pick up from where the older generation left. And I'm not, it's if you don't educate and provide these individuals with access levels, then there's a question mark whether that generation will take over from the older generation, and then obviously also a question mark whether the values that we see among those artists will be sustainable in the very long term.
That was a really insightful response. And if I can add one additional point that I thought of as you were talking, for our listeners trying to understand the market or various aspects of the art world or where things are, where they're headed, again, I think social media, Instagram specifically, is such a fantastic tool. It makes the art world less opaque by enabling you and other collectors to initiate conversations with each other, not just locally with other collectors near you, but globally. And I think if you can have these multiple conversations with people around the world, this will allow you to have a diverse range of perspectives and ultimately a more comprehensive understanding of the art world and the market. And I think also another form of diversity that you can have is in terms of collectors' priorities. You can speak with collectors who collect different types of artists, who collect for different reasons, who collect at different price levels or at different quantities than you. And so I think having this breadth of interactions and information can provide you with a really well-rounded view of the art market.
No, definitely. And I think social media, and I guess it's just adoption of digital, online sales. I think all those, whilst maybe 4 or 5 years ago we talked about online sales as something special, I think that's now become the norm. But I think all of these things, again, maybe takes away some of the friction that some people has felt exists between, in terms of engaging with the art world. And I mean, social media tool as a discovery tool, as a communication tool, has, allowed both, the audiences to find interesting, artists, but also for artists to kind of reach out to. So I think, technology, and it's good to actually interesting to see, in the way that COVID and the acted as a catalyst to kind of, obviously Instagram existed before that, but it became even more predominant and more important during that period. And I think, these things are, incredibly, as you say, incredibly important tool for finding things, learning, education. And that's what we need. I think, we need to create confidence in this market by getting people to engage with it, and obviously the digital way is social media and otherwise is a great way of connecting and learning and discovering new artists, new talents, old artists, and so forth.
Anders, thanks so much again for coming onto the podcast and sharing your data-driven insights on where the art market stands coming out of the major May auctions, as well as some of the key findings from the incredible reports we do at ArtTactic. Some of the reports we touched on today include the resale analysis report, our marquee evening sales report, and the snapshot reports. They're all available now on arttactic.com. Anders, thanks so much again, and speak to you soon.
It's been a pleasure, Adam.